Hello and welcome back to another episode of the Investor Financing Podcast. Today's episode is going to be how to buy properties pretty much hands off, right? A lot of us out there are busy working professionals. We make really good money as W-2 employees or having our own business, and we want to own real estate, but we don't want to own real estate where we live because we probably live on the West or East Coast and everything's $1 million, and we want to get some cash flow and build some long-term wealth. So our discussion today is all about what people coin as turnkey real estate, which is properties that are rehabbed, rented out, and managed professionally. And so basically all you have to do is put your down payment down, get a loan, or pay all cash for the property. And then we're going to talk about different markets. We're going to talk about market cycles. This gentleman today has been doing this since 2007. So if you guys remember 2007, a lot of you guys out there weren't investing then, but 2007 through 10 was a bloodbath. We're now in a interesting market, and a lot of people are wondering, will we have price dips or whatever? But what I can tell you is that usually during recessionary periods, rents go up. Can you believe that? Rents will even go up more. So today's guest is Matt Bowles. Matt has been a full-time digital nomad with no permanent base since 2013, and he has run his company from 65 countries. Wow, 6 continents in the last 9 years. He also hosts the Maverick Show podcast, where he interviews today's most interesting local independent entrepreneurs and world travelers. Welcome to the show.
Beau, great to be here, man. Thanks for having me.
All right, and today he's in Bulgaria. Where do you go? Where do you go next after Bulgaria?
I haven't actually booked an outbound flight, but I'm probably going to go meet some friends in France and hang out in Paris for a little bit.
Wow, interesting. What have been the top 2 or 3 countries that you like the best so far?
Man, it's tough to say. You know, earlier this year, I spent 2 months in Colombia, which I've been to Colombia before, but just a spectacular place. So I spent a month in the city of Medellin, and then I spent a month in the city of Cali, Colombia, which is the international mecca for salsa dancing. And it's a little bit smaller than Medellin and Bogota, so it's a little bit less well known, but incredible city. Had a blast. So I spent most of the first half of the year in South America, and then I just came over to Europe, celebrated my birthday in Portugal, drinking some wine in the Portuguese wine countries. And now I'm here to speak at a conference in Bulgaria. And I'm actually speaking to digital nomads about buying rental properties in the US from anywhere in the world. So that'll be coming up.
That is amazing. You live a very awesome life that you could just have that flexibility and that freedom. But, you know, if you're out there listening right now and you want a way to be a digital nomad, owning real estate that's fully run and managed by a professional property manager, could be a way where you could get to become a digital nomad quicker. And I've interviewed a couple people just like yourself recently that are all digital nomads. One gentleman was living in, he spent the last 5 years living in Colombia. Now he does 6 months in Colombia, 6 months in Brazil, and he has a short-term rental portfolio. So and he runs it fully remote. So it's amazing what you can do, and with technology and with the advances of everything, that you can do anything you want these days. So I've always been drawn to that lifestyle of, wow, wouldn't that be cool to be able to just travel and just run my life through my laptop and my phone? And that's essentially what you're doing. So let's dive into the concept of the Maverick Investor Group. How did you guys come up with the idea of getting involved in this? Obviously, real estate was fascinating to you. You probably were getting involved in owning real estate at the time, and then you said, well, there's a huge need for people to facilitate these type of transactions, to find these operators that can find and fix these properties in different cash flow advantage markets. So can you give me the framework of how you guys started and what you guys look like today?
Yeah, we look today exactly like what we started at, because what we did from the very beginning is we decided to focus on a very specific niche. So we only do one thing and one thing only for 15 years, which is helping regular individual people buy residential investment property, specifically cash flowing, performing turnkey rental properties in what we consider to be the most investor advantaged US real estate markets, regardless of where they happen to live. And those markets change over time, right? So one of the things we realized when we were starting the company is, okay, we're going to start this as a real estate brokerage. The beauty about that, by the way, and why I love this business model so much is that in the United States, the seller pays 100% of the real estate brokerage fees. So we never have to charge our clients any money to work with us at all, ever. And we don't get paid anything unless we're able to actually help them to find a property that's the right fit for them, passes their due diligence, they ended up closing on it. Only then do we get paid anything, but not by the buyer, right? So we never charge our clients any money, which I love. I'm like, wait, I can do a business and not have to actually sell things, and I can get paid for just helping people to build their wealth. Sign me up for that. And then what we realized as we were starting this real estate brokerage is that most real estate brokerages, the traditional model is they're confined to their own local market, right? When you think of a real estate agent, all they have to sell are the houses that are in driving distance from their office, right? That's all they have access to. And so if you ask them, hey, is it a good time to buy in your market? They have to say yes, right? They have to retrofit their marketing materials to sell the product that they have to sell. We wanted to flip that completely around and put the real estate investor buyer first and say, we want to be market agnostic and we want to help the buyer buy in the best real estate markets when they're ready to buy, regardless of, whether we are there physically or not. And so we created this model where we can help people and introduce them to private buying opportunities in different real estate markets around the United States. And as those property cycles change and certain markets become more or less advantageous to buy into, we can always help our clients buy in the most advantageous markets at the time that they're ready to buy.
Got it. Give us an example of a client that's been with you for several years that you've helped grow their portfolio. I mean, I'm sure like some people are doing onesie twosies, but some of them probably do tensies, 20s over years.
Sure. Yeah. I mean, we've had clients, for example, that were literally buying with us 10 years ago, right? 10 years ago, right after the crash that you just talked about, 12 years ago, let's even say 2010, right? There were markets like Phoenix, Arizona, which were some of the most advantageous markets in the US to buy in because they had just crashed and you could literally buy for below builder replacement cost of near new home and still rent it for a really compelling rate. So we had a bunch of clients buy in there. One of our clients named Dave, for example, bought a number of homes in Phoenix at that time. That market subsequently soared up, right? And got a lot of equity in there for everybody that bought. Most recently, he just bought 2 properties in the Indianapolis market, which today is one of the more investor advantaged markets based on the cap rates you can get there and the financials of that particular market.
Great. You kind of froze for a minute, but I'm just going to recap for the audience. So Dave bought early on towards the downturn in Arizona. That market got clobbered, and now it's like the hottest market. So Dave made a lot of appreciation, a lot of equity. He then either 1031 exchange or did cash out refinances, and then moved that equity into Indianapolis. Did you say?
Yeah, exactly.
And bought there because that was the kind of up and coming market at the time. And Indianapolis now has kind of really blossomed. So a lot of what your guys are doing is really kind of seeking out where to move the money, right? Or where to place the money, where you're going to get the most growth. So more of the good cash flowing, investor friendly states, cities, and because even every market's like kind of cycles, like you were saying. So staying on top of these trends. So how are you guys identifying the best markets? Are you guys just doing a lot of like due diligence, talking to a lot of local agents and investors in the markets, and then saying, okay, all right, these numbers look great. You must have your own kind of pro forma where you run it and go, okay, this is what our deals will actually look like. Some investors want more cash flow, some want more appreciation. So you're just figuring out where they can get that happy medium. Most of the inventory you're selling, are they single family? Or are they like duplexes or fourplexes?
Most of it is single family homes. Sometimes we'll have 2 to 4s, but usually single families. And you're exactly right. One of the things that we really like to do is to encourage our clients on this particular model to make their money when they buy, right? And real estate is a very unique asset class because it's multidimensional. And so you can make your money when you buy on real estate, when you purchase a performing cash flowing asset. You don't need to speculate on future market appreciation, right? That's very different, right, than when you're buying like stocks or cryptocurrencies or different things like that, where they need to go up in value in order for you to make money on those assets most of the time, right? You might have some dividend paying stocks or things like that, but most of the time you're putting your money in, you're hoping and praying it goes up. If it does, then you got to sell for a profit. Then you got to pay your capital gains tax. Then you got to hope that whatever's left over beats the rate of inflation in order to make money in real dollars. And that's how most people think about investments, right? But with rental properties, it's a multi-dimensional asset class, right? So you do have the housing market, which goes up and, down, and you can make money from market appreciation. But there are also other profit centers that can work for you regardless of what the market is doing. So you've got your passive income coming in from your tenant who's covering all your expenses. And then if you buy right, you've still got passive income coming into your pocket every month. Your tenant is also paying down your mortgage principal every month. So you're building equity regardless of what the market does. If you hold that house for 30 years and it doesn't go up $1 in value, guess what? You're going to own a free and clear property because your tenant paid off your entire mortgage for you, right? You're going to be taking your tax benefits and depreciating your property and taking those paper losses against your real estate gains that would otherwise be taxable and saving money that way. And right now, the most important thing I think that people need to know about is that when you buy and hold rental properties, especially with a 30-year fixed rate mortgage, you can actually profit from inflation. And so in inflationary times, especially really high inflationary times like right now, when you are owning rental property, number one, housing prices go up with inflation. Number two, rents go up with inflation. But when you lock in a 30-year fixed rate mortgage, you're borrowing that money in today's real dollars, and you are paying it back in future diminished nominal dollars that are worth less than the ones you borrowed. So instead of inflation eating away at your wealth like it would if you left your money in a savings account, when you own the rental property, inflation eats away at your debt and it debases the debt that you owe to the bank, and you can actually profit from it.
Yeah, that's pretty awesome.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hello, Beau here, host of the Investor Financing Podcast. Are you a lender, real estate professional, or vendor that provides products or services within the real estate investing and business owner space? We are offering a few sponsorship opportunities to get in front of a highly targeted audience. If you're interested, please click the link below for further information. We look forward to talking with you. Thanks. Make it a great day. In today's market, there's a lot of negative news coming out with obviously high inflation, interest rates have gone up. People are scared, right? People are starting to get scared because the media does a great job of scaring people. And then social media is like scaring some people. But what's your thought process going forward? What conversations are you having with clients? To me, it's business as usual because if you're buying in these cash flowing markets, those markets don't really have ups and downs like the West Coast and the East Coast. So I'm just curious on what you're seeing and what your thought processes are to make smart investments in today's market.
Yeah, I think it's actually better than business as usual. I think this particular year and these economic times that we're in create uniquely favorable opportunities in the real estate market for people. So you just have to look at what the actual numbers are, right? And so what you find if you do that is that there is an incredible housing shortage that is still upon us, right? Available inventory is about 1/3 of what it was pre-COVID and what it was in a normal market. There's an incredible shortage in housing versus demand. That's one thing that's very important. And then you need to understand that the result of that supply demand imbalance is that, before the market can, go down, it's going to have to recover in terms of the supply coming back up and, all of that kind of stuff, which is not something that is imminent or around the corner, right? The other thing to look at is how high inflation is and to understand that pushes home prices up, right? And if you look at the last couple decades, every single one of the last 6 times that the Fed has raised interest rates, that has correlated with a rise in home prices as well, right? So all of the indicators and all of the things that are going on right now typically correlate with rising home prices. Plus, as I just mentioned, if you lock in that long-term fixed rate mortgage, it's still below the rate of inflation. And it's still at a historically low rate, okay? It is higher than it was a year ago, but historically, if you look at interest rates over the last 30 years, 40 years, it is at a historically low rate and is below the rate of inflation. So you can lock that in and you can actually profit from inflation right now.
That's good. Very valid points. So what markets do you guys like right now, if you don't mind sharing with us?
Yeah, of course. I would say, over the last year, our most popular market has probably been St. Louis, Missouri. Super, super strong investor fundamentals there. We also have other Midwestern markets, as I just mentioned, Indianapolis, Kansas City, also been popular. Markets like Baltimore and then Philadelphia, if people want kind of a larger, top 5 largest, MSA market that still has very competitive cap rates and price to rent ratios. That's another one that we're working in right now.
So let's just say you have brand recognition because you guys been around. So people find you online, they find your podcast. What's the process like for somebody that comes in the door, and they're just like, I don't own any real estate. I'm a doctor, I make $400,000 a year, but I only have my 401k. I want to diversify into real estate. Now, do you have advisors that kind of meet with these people? They book an appointment. Can you walk me through the process?
Exactly right. We want to offer every single person a completely free video consultation with us, a one-on-one personalized discussion. So every single listener of this podcast, if you're interested in this, we would love to get to know you, get to meet you one-on-one through a video consult and get to understand your personal real estate investing goals, your buying criteria, your risk tolerance. Make sure we understand and are able to answer your particular questions, any concerns that you have or priorities that you have in terms of your investing goals. And then to help you design a plan to understand your long-term goals so that we can help you to build a rental property portfolio over time to meet those goals and get started on that. We also then have a lot of free educational materials. Remember, I told you, you're never going to pay any money to work with us. We don't sell. We don't have anything to sell, right? So we're going to do a free consult with you. We'll give you free educational materials. We'll give you free access to resources. We'll make free introductions to professionals. So we'll introduce you to preferred lenders that can qualify you for financing directly and let you know what rate and terms and closing costs you would qualify for. We'll introduce you to then the local property manager so you can start doing your due diligence and asking them, those more granular level questions specifically about the property that you're interested in. We'll give you other resources to support you in conducting your due diligence independently from out of state or even out of the country, wherever you happen to be.
That's pretty cool. And so over the last couple of years, what year did you see the most business? Are you seeing more business now today, or was it like 5 years ago? Does it stay pretty consistent?
It's reasonably consistent. What's interesting is that sometimes the profile of the buyer changes a little bit, right? And it was interesting because right after the real estate crash, like in 2010, and you remember that period, right? It was like there was all of these buyers, so many buyers in America were like, oh my gosh, the real estate market just crashed. I don't want to touch properties. I'm not going to buy it, right? Whereas there was all these international buyers that were like, holy cow, there's a fire sale on American real estate. You can literally buy below builder replacement cost. It's a crazy time to buy. And so, the buyers that were buying in 2010 from us were from Singapore and Australia and like these other places that were like, holy cow, everything's on sale. Let's buy it. And a lot of Americans were buying. And then as the market started coming back up through 2013, 14, 15, I would say that kind of shifted and it was more like US based buyers. A lot of clients in very expensive markets. We sell tons of real estate. The buyers that live in California or New York, but they want to buy in these Midwestern markets and build their portfolio there because there, of course, you can buy, 10, 15, 20 houses for the price of one that you could buy in these overheated markets, right? Because in the areas we're talking about, St. Louis or Indianapolis, for $100,000 to $150,000, you can buy a nice detached single family home in a suburban area with a yard, majority owner occupied community. And it's like 100 to 150,000, right? In one of these other markets, I lived in California for 7 years. A market like that, you would be paying, 10 to 20 times that much for the same house.
I know, it's unbelievable. It really is. Any plans for the upcoming year with the business? What is the business kind of? Do you guys do a lot of webinars? Where do you kind of like give your market overview? So like if somebody wants to kind of general information, do you do like monthly webinars on different markets and like why you like it, like these markets? And then also, could you speak to? I always find that sometimes turnkey has a kind of a bad name because like, oh, it's turnkey, you're paying too much for the property, et cetera, et cetera. But at the end of the day, really, when you're buying out of state, because your group has done this over and over, you have strong relationships with the vendors. Meaning, like, if I went out to Indiana myself and bought one property and found a property manager, and probably I find the wrong property manager, but let's say I'm having problems, they're less inclined to help me versus maybe Maverick Group, who has 50, 100, properties out there under management with that same manager. You got more clout.
Yeah, I mean, in terms of the turnkey model, right, I would say that there's a few primary advantages, and it may not be for everybody, right? Like there's plenty of people that want to go to their local real estate investor club and, basically create a job for themselves by finding houses and doing all the marketing and buying distressed and fixing it up and managing a contractor and then being a landlord themselves and all that. And if they want to do that, that's great. That's cool. Like no knock on those people at all. It's just not our clients, right? So our clients are people that value, number one, their time, right? Because they don't want to spend the time to do that. They would rather buy a performing asset and close and cash flow from day one and have somebody else manage it and deal with the tenants, right? So that's one thing. The other thing is risk mitigation, right? You got to understand how much of the risk relating to real estate has to do with the upfront stabilization of the property, right? When you are buying distressed properties and then you're getting estimates on the renovations, which could go over budget, or they could take longer than expected. Then you have more holding costs, or then it doesn't rent for as much as you thought. And now your cash flow is lower. And then, et cetera, et cetera, et cetera. And you have all of this upfront risk. When you're buying turnkey, you leapfrog over all of that risk because you can do your due diligence up front. So first of all, the property has to appraise for what you're buying it for, right? Because otherwise the lender's not going to give you a loan. So, that's not a risk that you're assuming, right? The lender is going to send their own appraiser to make sure that they're not giving a loan on a property that's worth less than what you're paying for. So it's got to appraise. Then you can send in your home inspector, right? Then you can verify the tenant qualifications. You can, verify all of these things before you close. And then when you close, you cash flow from day one. So obviously in the future, when you hold real estate, you're of course going to have some maintenance and some vacancy, and you're going to factor that in upfront as part of your expenses that you expect. So you're not surprised by that, but you are leapfrogging over all that upfront risk, and you are actually able to close on a performing property. And so our clients like low risk, and they like to save their own time as much as possible. So that's really kind of the profile of the people that work with us, I would say.
Yeah, that makes sense. I mean, even somebody who understands real estate, if they are busy in their job, maybe they've done a lot of rehabs and they realize like, hey, like I just want to like set it and forget it and make good stabilized investments. Because over the long term, what happens? There's appreciation, there's the tax write-offs, the depreciation. You got the mortgage pay down, you got your tenant paying your mortgage, and over time, no matter what, even these. I own a handful of properties in Indiana, and that market's notoriously never been like in a market that appreciates. And what's happened? It's appreciated very, very well. I own in South Bend, and there's been a lot of really good rent growth, which is surprising. So we're seeing this all over the nation now. Now, I don't think we're gonna. I don't think you'll ever see like the tremendous downturns like you would on like the West Coast, where things have gone up like $1 million. And my friend just sent me he bought a short-term rental property in Scottsdale for $935,000. She's doing pretty well with it. And he sends me like, it's been like 6 months, 7 months, and a realtor sent him like, hey, your property's worth 1.6 million now. I mean, that's just stupid, right? Like, hey, good for you, but I don't think it's really worth 1.6. Let's just say it's 1.3. It's gone up $300,000, $350,000 in like literally like 6-9 months. But where the markets you're investing in are more of like the growing workforce. You're going to get some appreciation, and you're going to get cash flow. And if you're getting cash flow from day one, you're going to get cash flow 20, 30 years from now, a lot higher cash flow.
Yeah, and all of these things are accelerated, right? I mean, even in these Midwestern markets, I mean, St. Louis went up 14% over the last year, right? Rents have gone up 10% over the last year, right? So all of these things are really being turbocharged at this time. And with inflation continuing to drive up both home prices and rents, it's really a uniquely advantageous time to get on the supply side of a high demand equation, right? When rental properties are in very short supply and there's very high demand, to be on that supply side at this time is a really advantageous place to be.
Well, very cool. Well, this has been a great overview of turnkey real estate investing. Where's the best place where people could start following you and learning more about your company and your business model?
Definitely. Well, if folks are interested in the podcast, we mostly talk about location independent entrepreneurship, world travel, the digital nomad lifestyle, how to build remote businesses, that kind of stuff. You can check that out at themaverickshow.com. And then if you're interested in the real estate stuff, I definitely want to offer everybody a free consultation with Maverick to come in, meet us, say hello, just get your questions answered. And you can grab that consult at themaverickshow.com/consult. So you can just type that in, register for a free consult. And if you just want to check out our website and just peruse around, it's just maverickinvestorgroup.com. We have a whole resource section. We've got articles, we've got recorded webinars, we've got all kinds of stuff up there. You can jump on our email list through any of those venues, and we would love to, help you on your journey as much as we can. But sign up for that consult for sure. Come in, let us know that you came from this podcast. We'll give you the red carpet welcome to all of Beau's listeners, and that's just themaverickshow.com/consult.
And I kind of want to end the discussion learning more about your lifestyle, right? As a digital nomad. And I think it's really cool that you're going to speak at a conference to digital nomads today about, hey, you have this business. A lot of these people, let's just say, are e-com businesses online. What have you, as you're talking to a lot and interviewing these type of people on your show, what are some businesses that people might think about starting that you are seeing some great success, where these people are making tons of money and now they're saying, oh, well, now they want to talk to you because they want to diversify, they want to get real estate. But what are some cool businesses that you've talked to or guests you've had on your show?
So here's the amazing thing. So I've been doing the show every week since 2018. So I was doing it for a couple of years before the pandemic, and then I continued doing it all the way through the pandemic. And I will tell you now, on the other side of the pandemic here, when you and I are speaking, the number of opportunities to become fully remote is just incredible, right? Like, you don't even have to start a business. You can just get a remote job, right? Most people found out during the pandemic that their job, which they previously thought was not remote, can actually be done remotely, right? And so now there's just a huge amount of location independent jobs. So even if you're not an entrepreneur, you can get a remote job, and then you can use that to design whatever type of lifestyle you want, right? If you want to travel the world, if you want to just go live in one other country, or if you just want to, use that to lifestyle arbitrage in the US. I literally know lawyers that work at New York City law firms and are now remote. So they just moved over to Kansas City, and their living expenses are, a fraction of what they used to be. And they're just doing the lifestyle arbitrage thing inside the United States. So, your options are totally up to you. If you are an entrepreneur, you want to start a business. I have interviewed people in so many different spaces, Beau, including so many that you would not think are traditionally virtual business opportunities, right? I mean, like my company, for example, when I tell people I own a real estate brokerage in the United States, and I run it while traveling around the world. People say, how in the world is that possible? And then we have the conversation that you and I just did to say, oh, okay, I understand. You have teams on the ground and they do this and you work with the buyers and you have the consults by video and then all that, so then they understand. And I deconstruct that with all of these different people. I've interviewed people that run architectural design companies. I mean, they have major Fortune 500 clients, right? Barnes and Noble, Sharper Image. They have these level of clients, and they run the business while they're traveling the world full time, right? I've interviewed people that run live event companies. One of my guests, I was interviewing her we were in Nairobi, Kenya together, and all of her live events take place in the United States. Before COVID, she had 100,000 paying customers attending her live events every single year in the United States. And she was running this business while traveling the world. And we happened to be in Nairobi, Kenya together. So we're doing an interview there about like, how in the world is she pulling this off, right? So there's so many things. If you just think about like what your business is or what you love or what you're already doing maybe, and you want to convert it to being remote, and then you just reverse engineer that, right? And you just think about, well, what would the obstacles be that would make this difficult to run remotely? And then what might some solutions be to those obstacles? And you just reverse engineer it. And I have interviewed people in just about every single business category that have found a way to do that.
Yeah, that really fascinates me. I'm going to definitely plug into your podcast because I love just hearing, you hear from so many smart entrepreneurs and it's not even, a lot of them not all of them are like these big buku, making hundreds and hundreds of millions of dollars and thousands of dollars, but you can really arbitrage. And that's pretty smart. Like the guy that works in the most high paying, New York law firm, but he lives in Kansas City because he can own a house for $200,000 that would be like $3 million in New York. It's just like you could cut your costs. I mean, the world is nowadays like, I think it's the best opportunity we've ever had with technology, with the level of education you get through podcasts like yours and mine, right? Like you can learn from all these people doing these great things, and that's just an amazing topic. It's so fascinating for me, where I've always been self-employed. I run a mortgage, I have my own commercial mortgage company, so I could run this remote if I really wanted to, and my wife recently got married a couple of years ago, is from Mexico. I met her when I was traveling in Mexico. And, in the back of my mind, I'm thinking, God, wouldn't it be nice just to go to Mexico and like nothing changes? Because in my mind, I was one of those guys that come in and like, I have to like come in and check my emails, like the stupidest stuff, right? Like where you could be doing anything from anywhere. And nobody knows the difference. Nobody would know I was in Mexico. Like it's crazy. It really is. So Matt, this has been awesome. You're a very inspiring guy, and I look forward to following you, and I wish you continued success. And anybody listening, if you're not owning any real estate, or even if you own some real estate, you might want to take a call with these guys and just kind of think about it as like hands-off investing, because I know the properties that I didn't buy that weren't turnkey that I was involved with ended up becoming a cluster. Eventually you work out the cluster, but it is a pain in the rear. So you could start with the end in mind, knowing that like, hey, I'm going to buy this $100,000 or $150,000 property. I need $35,000 down payment, lock in your rate, do your due diligence on the property, and then forget about it. Really, you forget about it. You get your monthly statement, and you go, okay, tenant paid. I had a little bit of maintenance costs, and that's it, right? And then that's what I love about long-term rental properties is you can really set it and forget it if you do it right. And I think, if the average person just bought one or two a year over the next 10 years, that's going to be your retirement right there. Like you're in 5 years time, if you did it right and you leveraged and you got some appreciation and you took equity out of property. So it's an amazing business, and really appreciate your time. I look forward to having you back on the show at some point. And enjoy Bulgaria and wherever you go next.
Thanks so much, Beau. Thanks for having me, man. This was a great time, and definitely looking forward to chatting with all your listeners and helping people build their real estate portfolio, man. Thanks for the opportunity.
Yeah, thank you.